Figure HELOC just cracked the top 10 by market cap, and 99% of crypto Twitter still thinks this is just another DeFi token with a weird name. Let me tell you exactly why that assumption is going to cost people money. We're talking about a token sitting at rank 9 globally. It's up 2.3% in the last 24 hours, which sounds modest until you realize the broader market has been bleeding sideways for 2 weeks. Something is accumulating here. Volume is building quietly, and the people buying aren't the ones posting about it on Reddit. Here's what you need to understand before this thing breaks out loud. Figure HELOC isn't a speculative bet on a concept. It's a token tied to actual financial infrastructure that is live, regulated, and already processing real loan originations. We're not talking about a white paper. We're talking about a system that has moved billions with a B in home equity credit on-chain. Figure Technologies built this on the Provenance blockchain, which they also helped create. A home equity line of credit, a HELOC, is traditionally one of the most painful financial products in existence. You're looking at 30 to 45 days to originate, mountains of paperwork, title searches, appraisals, underwriting reviews that feel like they were designed in 1987. Figure took that entire process and rebuilt it on-chain. Their system cuts origination time down to 5 days. That's not a small improvement. That's a structural advantage that every major lender in America should be terrified of. Now here's where it gets interesting for your portfolio. The RWA narrative, real-world assets on blockchain, is the trade that institutional money is circling right now. BlackRock tokenized a treasury fund. JP Morgan has been running tokenized repo transactions through their Onyx platform for 2 years. The smart money isn't debating whether real-world assets belong on blockchain anymore. That debate is over. They're now asking which infrastructure wins. And Figure is one of the very few projects in the top 50 that isn't just talking about RWA. They have actual loan origination volume, actual institutional lender partnerships, and a token structure that captures value from the activity flowing through the protocol. If you're finding this useful, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Let's talk price. Figure HELOC is currently trading with a rank 9 market cap. For context, that puts it in the same conversation as assets that have household name recognition. The difference is that most of those assets are priced on narrative. Figure is priced on a combination of narrative and measurable throughput. That's a fundamentally different risk profile. The realistic bull case through 2026 looks like this. If the RWA sector captures even a modest slice of the projected $16 trillion tokenized asset market that Larry Fink and others have been referencing publicly, and if Figure maintains its positioning as one of the only regulated live product players in the mortgage-backed token space, you're looking at a protocol that could see 5 to 8 times growth from current levels. That's not a moonshot. That's a sector rotation play with actual revenue underpinning it. The whale wallets are telling a story too. On-chain data over the last 30 days shows accumulation patterns that look less like retail momentum and more like strategic position building. Large wallets aren't dumping into this 2.3% daily move. They're adding. That's a signal worth paying attention to. Now let me give you the bear case, because anyone who skips this part is going to get wrecked eventually. The biggest risk here is regulatory. Figure operates at the intersection of crypto and mortgage lending, two of the most heavily scrutinized sectors in American finance. The SEC and CFPB both have jurisdiction over pieces of what Figure does. Any regulatory action, enforcement guidance, or unfavorable ruling on tokenized mortgage products could crater this price fast. That's not speculation, that's the environment we're operating in. Second risk, competition. Figure has a head start, but Centrifuge, Maple Finance, and a handful of other RWA protocols are all building in adjacent spaces. If a larger, better capitalized team decides to specifically target the home equity market, Figure's moat narrows. Their edge right now is execution speed and regulatory relationships. Those advantages can erode. Third risk, the broader macro. Mortgage demand is rate sensitive. If the Federal Reserve holds rates higher for longer into 2026, HELOC origination volume could soften. That hits the protocol's fundamental activity metrics, which could pressure the token even if the technology is sound. So here's my actual take. Figure HELOC is the most underreported top 10 crypto asset I've looked at in months. It has a real product. It has institutional adjacency. It's riding the most credible long-term narrative in crypto right now, real-world assets, and it's doing it with live infrastructure, not promises. The rank 9 position is not an accident. Smart money found this before the YouTube crowd did. That doesn't mean you go all in tomorrow. Position sizing matters. This is a volatile asset in a volatile sector. But if you've been looking for something in your portfolio that has both the Arduino narrative and actual on-chain utility behind it, and you haven't looked at Figure HELOC seriously, you're doing yourself a disservice. The window where this is a quiet play is closing. The search volume is already climbing. The on-chain accumulation is already happening. By the time this is mainstream conversation, the setup will be gone. Subscribe to Crypto Sayans. We post breakdowns like this every week so you never miss a move. Hit the bell too, because these are exactly the kind of setups that go from "nobody's talking about this" to "why didn't I see it sooner" in the time it takes most channels to write a thumbnail.